Welcome back to the news at 10. A forensic audit conducted by PricewaterhouseCoopers over issues of unremitted crude oil proceeds has recommended a refund of $1.48 billion to the Federation account by the Nigerian National Petroleum Corporation. Addressing journalists in Abuja, the Auditor General of the Federation, Mr. Samuel Okura, said the audit shows that total cash remitted to the Federation account in relation to crude oil liftings was $50 billion, as against the $47 billion stated by the Senate Reconciliation Committee between January 2012 and July 2013. The forensic audit was commissioned by the Ministry of Finance after the immediate past governor of the Central Bank of Nigeria, now Emir of Kano, Mohammed Sanusi, alleged that about $20 billion oil money was missing from the NNPC account.
For some time now, Nigerians had waited patiently for the forensic audit of the Nigerian National Petroleum Corporation over non-remittance of funds into the Federation account. This generated heated debates amongst Nigerians and led to a public investigation by the Senate Committee on Petroleum. But in a bid to ensure transparency, the federal government sought the services of an independent audit firm, PricewaterhouseCoopers. But only 3 days ago, the president received the report of the audit firm. He immediately directed that details of the report be made public. This is what informed this meeting. The Auditor General of the Federation revealed that the NNPC is to refund a total of $1.48 billion to the Federation account. Some other findings from the report shows that the total amount spent as subsidy for premium motor spirit between January 2012 and July 2013 is $5.3 billion, while the total amount spent on dual-purpose kerosene subsidy was $3.3 billion.
The total cash remitted into the Federation account in relation to the crude oil liftings was $50.81 billion. And not $47 billion as earlier stated by the Senate Reconciliation Committee for the period from January 2012 to July 2013. Based on the information available to PwC and from the analysis above, the firm, that is PwC, submitted that NNPC and NPDC should refund to the federal government a minimum of $1.48 billion.
The report, however, recommends that the NNPC's model of operation be urgently reviewed and restructured, as over 46% of its proceeds from crude oil revenues was spent on operations and subsidy.
The corporation operates an unsustainable model. 46% of proceeds of domestic crude oil revenues for the period was spent on operations and subsidies. The corporation is unable to sustain monthly remittances to the Federation account committee, that's fact, and also meets its operation costs entirely from proceeds of domestic crude oil revenue, and have to incur third-party liabilities to bring the funding gap.
The issue of non-remittance of funds to the Federation account by the Nigerian National Petroleum Corporation has always been an issue with the state oil company. Key players in the oil sector, and indeed all Nigerians, will be watching to see if some of the issues raised by the audit will be addressed.
Meanwhile, the NNPC says the forensic audit report by PricewaterhouseCoopers has actually absolved it of culpability. The corporation goes on to say that the amount due for remittance to the Federation account is $1.48 billion, being signature bonus, taxes and royalties on the assets transferred to the corporation's upstream subsidiary, the Nigerian Petroleum Development Company. The NNPC states that the amount which the audit firm recommended for remittance to the Federation account was not part of the alleged unremitted revenues from crude lifting. Meanwhile, the Minister of Petroleum Resources, Mrs. Dezani Alison Madueke, has directed the NNPC to defray the signature bonuses, taxes and royalties in line with the recommendation of the forensic audit report. To issues in the health sector, the College of Medicine, University of Lagos has opened an audio-visual studio in its campus in Lagos, and that's in the nation's commercial capital, not actually in the health sector. The Provost, Professor Folashade Okunbola, says the facility will make learning more fun and impactful on the students and the school. Our correspondent, Edie Thompson, now reports.
Ribbon cutting and the ultra-modern audio-visual studio in the College of Medicine of the University of Lagos is open for use. Representatives of NNPC, NAPIMS and Shell Nigeria Exploration and Production Company, SNEPCO, can now see what they have contributed to medical education.
This place is for an audience that does not necessarily have to be inside the studio. And people can...
The viewing center only spreads the activities taking place in the studio, which is next door to it.
Very happy to see. It's a PreSonus mixer.
A setup of what will be obtained, interview with medical personnel or medical operations, which students can learn from, among other activities.
Apart from education, there's also the visibility of the college. Then we also are having, we intend to go into telemedicine, those coming from outside and inside. So that's also an aspect of this facility.
The control room completes the facility with video and audio mixers, duplicating machine and other equipment, which will facilitate the process of making learning fun.
In the generation we have today, the young kids of today learn audiovisually, so I think this is an appropriate project. They are very bored to sit in a room and have somebody talk to them. This is a way they use YouTube, they use Facebook. They're used to videos, they're used to audiovisual learning. So I think it's something that's really going to impact the young lives, and it's something that's going to make the overall delivery of medical education in Nigeria very effective.
At the end of the tour, a show of appreciation from the personnel of the College of Medicine, University of Lagos, to the sponsors, NNPC, NAPIMS and SNEPCO, and the promise to not just maintain the facility, but expand it. Edie Thompson reporting for Channels Television News.
First Bank. You first.
Welcome to Business News. I'm Anne Nwawadu. The federal government sold 192.39 billion naira worth of Treasury bills with maturities between 3 months and 1 year at its last auction. And according to Debt Management Office, yields of 3-month paper attracted 10.98%, 0.22% less than what was recorded at the last auction in January. The yield of a 6-month paper fell 0.29% to 13.9%, while the 1-year paper fetched 14.30%. Total subscription fell to 461.91 billion naira compared with 611.2 billion naira demanded by investors at the last auction. The DMO sold 45.17 billion naira in the 3-month paper, 30 billion naira in the 6-month paper, and 117.22 billion naira in the 1-year paper. The local bulls could not sustain the gains recorded in the last 3 sessions. The benchmark index shed 1.36% to close at 30,200.97. Balaji Akinwale has the details of the day's trading figures.
Hello, welcome to the Stock Market Report. The bears resurfaced at the equities market today, ending 3 straight days of positive sentiment as investors booked profits off some blue chip stocks. The key indicators fell by 1.36%, putting the all-share index at 30,200.97 and 10.07 trillion naira. Market breadth turned negative as well. There were 19 price gainers to 32 price losers. The top 3 price laggards were Nigeria Brewers, Dangote Cement and Flour Mills of Nigeria. On the other hand, USCN, International Brewers and USA Property were the top 3 price appreciators, but with gains below 2 naira. Access Bank, FBN Holdings and ETI were the most actively traded equities for the day. And when the closing bell rang, investors had 4,417 deals and 3.96 billion naira value on 477.49 million shares. And that's it on the stock market report. I am Bolaji Akinwale.
Thank you, Bolaji. Well, until this Thursday, the Nigerian stock market had witnessed recent positive trading, and operators attribute this trend to a number of factors, including renewed investors' appetite. Some brokers believe that most equity stocking gains now have hit their support level, while others say that investors now have clarity on the election uncertainties. Our correspondent, Temple Ashaju, reports.
Between Monday and Wednesday, equities at the local bourse maintained a three-day rally of about 4% gains. This positive sentiment is as a result of bargain hunting between investors and operators.
There is only so much you can be in negative when you've lost so much. So value would always be there to shine through. So I think a lot of investors are beginning to spot value, coupled with the fact that there is a lot more clarity with the election.
It is still a season of speculative buying and selling in the market. Whether the glimpse of the outcome of the election has a positive impact on stocks remains contestable amongst operators.
I believe that majority of the stocks have gone to the rock bottom level, and there's a great resistance at the moment. People don't want to sell at ridiculous prices again.
You've seen a situation whereby we've seen significant overbought situations in the market, in the sense that these overbought situations in which you've seen significant sell down of positions by equity shareholders and investors. That's created buy opportunities. The external factors which have mentioned, political events, are clearly outside the environment.
I dare to say that a lot more people would, particularly the foreign investors, can appropriately size up who the competitors are now. The major players, the opposition party and the ruling party, they can then say, look into their background and try and do a better assessment.
The rally turned over a market value of 351 billion naira. With the year-to-date performance inching lower to 11.65%, the driving factors may vary, but it is clear that the bargain trend is keeping the benchmark index up stick. Temple Ashaju, Channels Television News.
Thank you, Temple. Well, that's it on Business News tonight. The rest of the news at 10 continues shortly.
First Bank. You first.
Still ahead on the news at 10, Tunisia risks being banned from the next Africa Cup of Nations for accusing CAF of cheating. That's on Sports News. Just stay with us.